We have another rate hike scheduled for this Wednesday, and right now, economists are expecting somewhere between 50 to 75 basis points. There are arguments saying that it might be closer to 50 basis points following Australia because they did raise rates lower than expected. But given the stronger than expected CPI last week, the market as a whole is leaning towards a 75 basis point rate hike, which would take our overnight rates from 3.25% to 4% this week. Talking to a lot of clients, it's not the high interest rates that actually scare investors, but the uncertainty of how much rates will go up. But honestly, this uncertainty is certainly declining compared to half a year ago, and it's actually looking a lot more that way if you do dig into the numbers. Banks were expecting us to peak around 4%, which doesn't really make sense anymore, but we do think the peak would be closer to 4.5%, which is in line with what OECD is expecting. And so in this video, let's talk more about it. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. The latest CPI numbers are definitely stronger than expected, and the September numbers just edged slightly lower than the August numbers, coming in at 6.9%. We've actually come down 3 months in a row now, which is positive, but once people dive into the data, you can see that the drop mainly does come from energy, and everything else, food and services, is still creeping up. The central bank's target is a 2% inflation, and right now we're at 7%. So basically, there's no visible proof that inflation is coming down yet, and so the central bank would have no choice but to continue to pump up rates. But there are a couple of things to keep in mind. Remember, inflation is a lagging indicator, and we actually just started aggressive rate hikes in mid-July, and the numbers we just got was for the end of September. It does take time to work things into the system, so it's pretty realistic that we're not seeing these big drops in inflation yet. The second thing to keep in mind is that the pace of increase is actually slowing. Inflation went from a steep pace upwards at the beginning of this year to decelerating and peaking in June, and now it's actually coming down month over month, which is positive and really a sign that things are slowing down. But it does seem like many people are readjusting their expectations of where peak rates are going to go, and it does look like the market as a whole is doing that as well, which might affect real estate prices. A lot of times, newer investors aren't sure whether they should be using fixed or variable rates to crunch numbers, and if you ask me, you should go with fixed rate just to price real estate in a rising interest rate market, because that shows what the market expecting in terms of interest rates for the next 5 years. And if you go over to the 5-year bond yields, which is what fixed rates are based off of, you can see that we did peak in June and then came back down. Because interest rate expectations haven't changed since June, this is why real estate prices have actually been stabilizing over the past 3 months as well, hovering at around the same levels. But what you do see is that at the end of last week, 5-year bond yields did come up above the June levels for the first time, and it went to the highest point at 25 basis points above the June peak before coming back down, and right now it is hovering at around 15 basis points above the June peak levels. There's 2 effects on this. First of all, fixed rates are based on bond yields, so you should see fixed rates come up slightly around 15 basis points in the coming days. Secondly, because interest rate expectations have finally come up, we actually might see prices come down a bit more. But in reality, a 15 basis point creep up isn't actually that significant and only amounts to a 1.5% price drop. Basically, if you bought a house before this price adjustment, but you managed to get a 5 to 10% discount off of average prices, which is pretty likely these days, you probably ended up getting it at a better price compared to if you were to buy at average prices after this adjustment. We think the biggest thing that will bring confidence back to the real estate investment market in Toronto is when the interest rate uncertainty goes away, and we definitely think we're much closer now. Compared to half a year ago when we had no idea how high interest rates will go, we're definitely seeing more signs that we are getting close to the peak, and so this is the best time to start looking into entering the real estate market if that's in your plans. As long as you can get a great price, you can cash flow positive even at our current much higher interest rates. And I do believe that this is the most important thing because holding power is critical as a real estate investor and the best way to make sure you can benefit from Toronto's long-term appreciation. The icing on the cake is that you are getting an amazing price right now, and cash flows will actually look better when interest rates come down. So if you want to learn more about what today's deals look like, just reach out to our team because we'd be happy to help you out. We're a real estate sales brokerage that focuses on investing in real estate in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you these deals, and eventually buy you the best one for you. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you do want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.